It's 5 o'clock in London, it's midday in New York, midnight in Hong Kong, 2 a.m. in Sydney, 9 a.m. in San Francisco, and 9:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young, the IPO-VID Livestream Series 30, episode number 3, that's going to be. So in total, episode number 177 starts here. We're recording this today, ladies and gentlemen. I'm somewhere in deepest, darkest Southeast Asia, having a fantastic time of it, but I don't really feel like coming to you live at midnight, so I hope you will allow for the fact that we are recording this fabulous show a couple of weeks in advance, in which case, by the time you watch this, presumably tariffs on China and US goods are now at 474 billion%. Interesting point to ponder, actually, when we're thinking about global shipping and things like that. You know, the US per se is a rounding error in cargo shipping. There's something like 0.4% of all the world's cargo ships registered. Quite interesting, of course, that the leaders, quite interestingly, out of a gross tonnage of about 1,035 million tons worldwide, is Panama with 215.8 million tons. Second comes the European Union with 205.1 million tons. And thirdly, that place that everybody in shipping has heard of but nobody can find on a map, Liberia with 123.8 million tons. Running out the top 5 is the also not discernible by most on a map, Marshall Islands with 81.1 million tons, and then Hong Kong's SAR on 78.5 million tons, which at least does represent a trading entrepot, albeit perhaps not moving as much stuff as they were just a few weeks back. Our topic today, ladies and gentlemen, profiting from inclusive finance, involves 2 fabulous guests, one returning for a second run at this show, Alessandro Hatami, and a newcomer we're delighted to welcome, Meaghan Johnson. So Alessandro, as you may remember, is a financial transformation strategist, author, and a leading voice in the digital transformation of banking, payments, and finance. He's the co-author of Reinventing Banking and Finance, which was not just the best banking book of 2021, according to Investopedia, but was also a discussion we had with Alessandro long ago. My goodness, over 100 IPOs ago, pretty much. IPO-VID number 84, Reinventing Banking. The co-author of Inclusive Finance that we're going to be talking about today is Meaghan Johnson, a seasoned fintech researcher and consultant passionate about using emerging technologies and business models to increase financial inclusion, improve banking, and create the best possible customer experiences. Meaghan is a senior lecturer at CFTE and leads a digital finance online course at Manchester Business School, amongst other great achievements. Guys, welcome to the show. Let me just ask, first of all, Meaghan, where in the world are you today?
Thank you so much for having me. I'm currently in Portugal. It is not sunny. We are in the middle of a endless weather pattern of rain. So don't know what's happening, but coming to you from Portugal.
Coming from a rainy Portugal. Alessandro, where in the world do we find you today?
In a rainy London. I'm also subject to my company's fire alarm. So I'm now in my gym trying to see if I can get connectivity to be able to speak to you guys. So I apologize if you see anybody's half-clothed passing behind me. That's what's going on. Yeah.
You disappoint me. I thought it was going to sound like somebody's really exciting, very funky, modern fintech office where people are just done away with being fully clothed.
I had one, but they had a fire alarm, unfortunately.
So, what an interesting topic. This book, you've just published it, Inclusive Finance, How Fintech and Innovation Can Transform Financial Inclusion. Meaghan, tell us, how did the idea for the book come about?
Oh, that's a good question. And I think it would have to be diverted to Alessandro. So I was brought in as a co-author, but I think that we had the general idea, but I think, the two of us put our heads together to really focus on, the main sections and objectives that need to be discussed in detail when talking about financial inclusion. But I think Alessandro can probably handle that question a bit better.
Alessandro.
You're very kind, Meaghan. So we started off thinking about financial inclusion almost as an outcome of having worked collaborated together for several years. We realized that there's a huge percentage of the population of the world that is underbanked. And this population is actually distributed in areas that are not necessarily just less affluent. There's a whole series of reasons why they're underbanked. And we thought, okay, so how can this be addressed? And we realized that there's a big push by technology companies in financial services, or fintechs, if you want to call them that, to actually increase the inclusivity of the financial product. And as the financial services business is changing because of digital technology, we run the risk of actually exacerbating the exclusion of certain segments of population. And so we said, okay, there's no real reason for it in the technology of what's now available. So we thought, okay, how can we use technology to actually help financial inclusion rather than making technology the reason why financial inclusion is increasing? So I reached out to Meaghan and we chatted a few ideas, he bounced them off, and we came up with the whole concept of financial inclusion as a means not just for social benefit, which is the obvious benefit, but also economic benefits, so helping economies of countries grow, and also the wealthier countries can bring in people that are excluded from it. And last but not least, a financial return. So if you're a provider of a service that nobody else is providing to a segment that is underserved, that can be a financially remunerative proposition. And we thought, okay, so why don't we put this thing together? And the book came out from there.
So that's quite fascinating. I mean, first of all, let's take one key point you just made there, Alessandro, and I'll address it to Meaghan. You mentioned this word. It's not even so much about the unbanked, but actually you're talking about the underbanked. And I think that's quite an important discretionary issue that people need to think about. So Meaghan, give us a flavour for the idea of the underbanked, because that seems to be something that's happening all over the world.
Yeah, absolutely. So, I mean, there's no hard and fast definition for what underbanked actually looks like or what it means. But in general, underbanked individuals, may be using a formal financial service product for, say, payments or for, a current account or as a wallet, but then maybe using informal or may not even have access to financial products or services that are, more aligned with savings or lending or insurances. So that's kind of what it looks like at the foundation. And then when you start to look at areas like lending in particular, you start to kind of get this picture of what's called, credit invisible people. And this is like very much at the heart of what the underbanked looks like. So, on the one hand, you have someone who is using a mix between formal and informal financial products and services. And on the other hand, you have people that, due to constraints largely around, lack of data from a credit scoring perspective, or even perhaps from, an ID or an infrastructure perspective, you have people that in theory can be using formal financial services, but due to these constraints are a bit invisible and don't have that access.
So that's very interesting because, I mean, obviously, therefore, what are the constraints essentially that are driving the problems there, Alessandro? I mean, is this a regulatory issue? Because you say it's not really technology.
It is and it isn't. It's interpretation of regulation that is the problem. And I think a lot of the banks are actually creating barriers to the underbanked and the unbanked to be able to access services based on their interpretation of regulation. And if you talk to the regulator, the regulation, they're quite open to be able to be respected or followed, while at the same time being creative with. So some of the means of authentication that the banks require, some of the onboarding capabilities or minimum requirements that they require from individuals are driven by their interpretation of regulation. And this kind of falls into a bigger story, which is that of a certain type of inertia. There's a legacy issue with the banks of an inertia about trying to replicate ways of onboarding, way of engaging customers that was designed in a time where the financial services was not as sophisticated and as open as it aims to be right now. So in a way, the legacy issues of the banks are a big driver. But then let's not forget there's another dimension to it, which is education. And is the fact that individuals don't know that this financial product can actually be helpful to them. And there's a negative perception of what the banks are able to offer them, partly driven by the way the banks have behaved with these segments, but also based on lack of information or education. So the perception that you can actually get a loan from a bank is something that some people don't believe because they believe that the banks will take advantage of them, or that they're a safe place to keep your money, or it's a good place to hedge for the future if you have a bit of surplus. And I think these things combined, so legacy issues of the banks plus lack of education, and have created a situation where large groups of people in the society right now don't have access to the financial products that would really benefit them.
Fascinating. And thank you, Alessandro. And I'm sorry, Meaghan, I think I might have cut you off slightly there. I have a slight lag in my internet from my Warsaw hotel room today. So carry on. Tell us more about this. I mean, it's such an interesting area, the whole issue of the underbank.
Yeah, I think I just wanted to follow up on Alessandro's point. I think it's also interesting, I think Alessandro talks very much about the more traditional commercial banks, but, we also have this interesting situation in which, over the past decade, we've seen lots of fintechs and neobanks emerge that are very hungry to kind of serve these underbanked individuals. But what happens is often in the European context in particular is that, these fintechs and neobanks, in the absence of being fully regulated, will have to use an embedded finance or a bank as a service provider. Typically in the EU, these are restricted to an EMI license, and they're also quite restricted as well. So, on the one hand, while the commercial banks have historically been a bit bad in addressing this, the fintechs, have tried to tackle this challenge, but they've been a bit held back by, the scope and appetite of their banking partners. And I think something, interesting as well to consider is, what are the cultural kind of nuances and values that some people have? So, for example, I know that in the UK, there's a couple really interesting fintechs, one called Ion Capital. They're looking to bring to market Sharia compliant loans for Uber drivers and gig economy workers. So I think this is a really interesting kind of use case of a person who, is also underbanked because of their values. So, if there isn't an adequate solution for those that would like to engage with Sharia compliant, banking products and services, this is a tricky situation. And, while this is kind of this voluntary exclusion, if you will. So I think it's interesting to look at it from both the commercial banking's perspective and where these challenges emerge, but also, how fintech has been trying to fill that gap, some of the challenges and some of the niche use cases that are coming about.
And that's very interesting, Meaghan, because actually, one of the things that you both have said already, and you comment on how we're profiting from inclusive banking. And I think that's very, very interesting. So the new wave of whether it's EMIs or however you want to look at payment providers, neobanks, whatever, they're able to deliver services more cost effectively and be able to profit of helping these underbanked niches. Meaghan.
Sorry, what was the question?
Essentially, they're able to, what I'm saying is that in the past, very large banks have had a problem with these sorts of niche products or niche customer bases because they always say it's too expensive to service.
Yeah.
But you're saying now that in the world of the modern era fintech, it's much more cost effective and feasible to profit from smaller niches of people.
Yeah, absolutely. I think, we've seen this across all kind of dimensions of the fintech space, right? So in theory, being more agile, having a lower cost to serve, and thus being able to provide lower cost, better from a customer experience perspective, products and services. And again, in doing the research for this book, I predominantly focused on kind of the fintechs and the newer players that are looking to tackle the exclusion problem. And, just seeing the breadth and scope of fintechs and new players that are, again, just focusing on one particular use case, one particular segment. Another great example comes from a mutual friend of ours, Nina. So she's based in the UK and basically looking to provide digital rotating savings clubs, for migrants and individuals, again, that have different values in terms of how they approach savings and kind of investing to an extent. So yeah, again, I think, as we see with other facets of fintech and the impact of fintech, the fintechs come along, kind of give the big banks, a little scare and show that it can be done. So, hoping that the role of fintechs in the financial inclusion space can also wake up commercial banks.
Now, that's very interesting. So, I mean, Alessandro, talking about that, you obviously have considerable experience of large commercial banks, working with them, endeavouring to transform them, etc. Do you think that the large commercial banks are willing to, let alone able to, respond to these sorts of challenges and therefore also profit from the underbank?
I think in a way, I don't like the way you say profit of the underbank.
No, that's fair enough. Actually, I agree. It sounds as if I'm talking only about profit, but I mean, can they successfully incorporate that into their strategy? That's perhaps a better way.
The point is, let me kind of find a way in between the two things. So, banks are financial institutions, are businesses. They need to they have to generate a return, and they can dedicate a certain percentage of their spend into welfare and to charitable work. But what we're trying to say is that cannot be a huge amount compared to the investment that they would make in creating a new product range. So in the UK, there's about 1 million people that are unbanked and about even close to 3 million that are underbanked. Serving this segment is something that the banks are seeing, unfortunately, as a potentially a something to do with ESG and charity and so on and so forth. Well, they should be seeing this as an opportunity to create a product that is fair, but also allows them to the banks to make money from it, but it also allows these individuals to benefit from the provision of the product. What is happening right now is that the application of certain rules and regulations by the banks, a certain approach by the bank, has excluded this segment. And what we're suggesting is just rethink a little bit the methodology that you have for onboarding, methodology that you have for services provided to them, review your pricing, etc., to create a situation where or sees a range of products that are beneficial to a segment that is currently underserved. So what we're saying is if you tweak the way you operate while remaining fully compliant, fully risk averse, you can actually expand your user base and you generate new customers, which is something that resonates with banks because banks ultimately are enterprises and they need to be focused on the bottom line. So if we try positioning this as a means of profiting from the underbanked, it comes across as I'm taking advantage of a segment. If I position it as a charitable activity that they should be doing because that's good for society, etc., yes, it will be an important thing, but it will not get a high priority. If we position it, there's an underserved segment in the economy that you could serve profitably while delivering value to that segment, while being fully compliant at the same time. Suddenly you're opening a new horizon. It's like suddenly finding that you have an extra door, an extra room in your house, and that is what we're trying to promote here.
Yeah, and I think it's important to say, I mean, I may have used the word profit, and I think it's not unreasonable to seek profit, but there's a long way of saying profiteering, which is completely unreasonable. So. Which many banks have been accused in the past, rightly or wrongly in certain cases.
Yeah.
But it's very interesting. So we're trying to extend this longer tail to the underbanked. Now, let me ask, I mean, Meaghan, is there something about what the underbanked people do or want that makes it more difficult to provide the service to them in terms of the service they're looking for?
I think we'd have to look at this from a product by product case, but I don't particularly think so. I mean, I think, when you think about the lending space, traditionally, the problem has just been a lack of, adequate data on, people who may, they're called credit invisible, right? So for example, someone who may be a bit lower on the kind of socioeconomic ladder, who may not have that data, which is used by traditional credit bureaus. And, this is where we start to see things like open banking or big data and definitely AI kind of look to take those alternative data points. So for example, I mean, this is a bit creepy and a bit Black Mirror, but, is there the possibility to use someone's social media data in order to say, okay, this person may not be credit visible in the traditional sense, but we get a sense, from their social media profile that, there is a good chance that they would be a worthy candidate for, a loan of say under £1,000, euros, dollars, whatever. And, for this individual, a loan of that amount can be, a make or break, put them on the right. And I think something, again, kind of building upon what Alessandro was talking about, I think particularly, when I look at the U.S. and, how the U.S. in the early 1900s, right, it was predominantly, people coming from Europe and other countries, just starting out, starting small businesses, growing these small businesses, establishing themselves. And I think, from the banking perspective, right, especially with the small business lens, that person who you may not think is creditworthy and a profitable customer now, given the right opportunity, this could, 15 years down the line turn into, a high net worth individual. So I think it's also, important to think about how this subset of your customer base, with what potential they can reach, say, in 15 years down the line, with the right financial products and services, specifically around lending and insurances.
Yeah, and go ahead, Alessandro, please.
Sorry, I muted myself.
Yes,
There's
we can hear you now.
Too many people exercising next to me. So there's an element of access also that has to be considered. So one of the things that is excluding certain segments is that there's no bank near to them, because bank branches are closing. The closing of the branches is driven by the need of the local population. If the local population is unbanked, that branch is not viable, so they close them down. So digital technology can be a really powerful tool to actually enable some of these unbanked people to use their mobile phones, to use their digital devices to be able to create bank accounts and validate themselves. And the profile that, the comment that Meaghan made about the social footprint of a person, this is not something that you would do without their permission, obviously. This is something that will be part of the application. Would you like us to look at that? There's an interesting business, for example, in Canada. It's called QuadFi. And what they do is they look at the new to market individuals. And these are people that are potentially educated individuals that have a career and sit in the country of origin. Once they move to Canada, they are unable to get a financial product made available to them. What they've done is they've connected with different different experience or credit control companies across the world. And they're able to use the data from the country of origin of the individual to underwrite them and give them the financial products that they require. So this idea about globalization of data and be able to gain access with the permission and within the regulatory environments that are required, that are indispensable, I think would really work well. Another interesting example is these are obviously a higher end individuals because they're educated and they have degrees. Think about countries that actually have no financial products, but individuals that don't have access to financial products, but have access to mobile devices. And they are able to use these devices to actually get a basic banking proposition. And obviously the M-Pesa proposition in East Africa is obviously a great example of how, with a bit of technology, a bit of innovation, financial products can be created that are actually sustainable and actually incredibly beneficial to these individuals.
I think also, Alessandro, to build upon the M-Pesa example, I mean, I think agency banking as well, which is another aspect that's also transformed, East Africa and other parts of Africa, but also, parts of Europe and in the US as well. So also rethinking kind of what that branch presence looks like. So it doesn't necessarily have to be a bank branch in the traditional sense, but how can you leverage other locations to bring financial service access to individuals at a reduced cost?
I think bottom line is
go ahead, Alessandro.
So I think the bottom line is that there is a possible there's definitely a pent-up demand for financial products. And I think there's an opportunity for the financial services providers to actually reach out to these individuals by creating better points of access, by creating better onboarding capabilities, better services and products that are more suited to their needs. We talked about the US, Meaghan, just now. And there's 5 million people in the U.S. that are unbanked, and these are not just illegal. These are not illegal immigrants. These are local U.S. citizens that actually do not partake in the financial services proposition. So these people are not excluded from the economy. So they live in the economy and they're entirely cash driven. In an environment, in a financial services environment where cash is being moved away from and is being sidelined, these people are going to become increasingly excluded. So their quality of life will go down, and they will have to be more of a drain to society than a contributor to society that they could be.
Yeah.
And I think the financial companies should be thinking, okay, what can I do to tweak what I'm doing? Should I create some limits? Like Meaghan was saying, beyond a certain amounts, you need to authenticate yourself in a different way. But to be able to have these individuals partake in the financial services environment of today, and then slowly realize how they can adapt to it, how they can position themselves right, what products are suitable for them. But the first step has to be by the provider, not by the people asking for the self-service.
Yeah, and I think to build upon that in the U.S. as well. I mean, the stakes are even higher, right? Because you have the FICO score, which basically, this number makes or breaks what you can do, right? If you can buy, if you can get a lease on a car, and without a lease on a car, if you're looking to start a small business, how can you get from point A to point B? So it kind of becomes this vicious circle almost in a sense as well. So it's like getting that unsecured line of credit that allows you to then build your FICO score, which then opens up more opportunities. And I think in the US in particular, we've seen a lot of innovation in this space from neobanks that are looking to, support people in building up their credit, which then opens up more doors, from the financial services perspective.
It's fascinating altogether, the way that this is knitting together around the world. And indeed, I mean, you make the very good point, and you're talking both about M-Pesa, for example, where you can see that you can get your M-Pesa information from all manner of little wooden huts all across Kenya and indeed all across different parts of Africa. And I think, I'm trying to remember, I think it was at Z-Bank was I may have mixed up my French fintechs here, but there was one which I recall fabulously. They operated out of the tabacs, all the little tobacco kiosks, and they had a wonderful little...
Nickel started there too. The Nickel Bank also started there in the tobacco shops in France.
Right. Yeah, and I mean, that was fantastic because they had a little terminal that did your instant AML, because it was a scanner that was the size of sort of your passport, and you could scan your electricity bill. And it was. I mean, that was a very, very interesting idea for trying to accelerate the underbanked. But that's a staggering number, talking about 5 million people that are underbanked. We're going to come back to you in just a second. Let me just go quickly to... There's a lot been happening in the world of finance recently. As we all know, CNBC were quite confident we were out to have a stock market crash only a few weeks back. Warren Buffett and Li Ka-shing are both scaling back their portfolios. Li Ka-shing, Hong Kong's richest man, who of course is also well known in the world of shipping as we began this story, this whole show. He might even be selling his mobile business. What's driving these major moves? Here's one of our most recent Big World short videos that you can enjoy.
Meanwhile, in Big World, fascinating to consider some of the big names in investment. They've been selling down assets recently. Of course, Warren Buffett's been in the headlines, but look over to Hong Kong. 96-year-old Li Ka-shing, the richest man in this SAR of Hong Kong, a legendary entrepreneur and businessman. He's been selling as well. It's not just this ports deal, which is currently being held up over shenanigans to do with antitrust between China and the USA. He's also thinking about selling all of his mobile telephony business, which is something that made him an incredible fortune over a series of deals all the way across the course of the last generation, 2 generations since the beginning of the dot-com world. For more in Big World, like or follow.
Interesting thoughts there about Li Ka-shing and what's been going on in his world of portfolio management. I'll probably have some more updates from the front, actually, by the time I talk to you live next time, because I'm in Hong Kong in the course of early May. Now, back to this fascinating book here. We're talking about the whole art of profiting from inclusive finance, adding that to the world and looking at this fabulous new book that's come out recently. Actually, just tell us very briefly, Inclusive Finance, published by and presumably available in all good bookstores. Meaghan, who's the publisher? Sorry.
Oh, yes. Our good friends at Kogan Page, who have been incredibly supportive and patient as we spent the time writing this book. I think, Alessandro, this is your second Kogan Page book.
It is. They've been a fantastic, very supportive organization, very collaborative. I would recommend them highly. The book is available, as you were asking, on Amazon and on the Kogan Page sites and in stores. I actually was super excited to go into Waterstones in London and finding my book there. Actually displayed in a prominent way. So I was even more impressed with myself and with Meaghan, of course. I think it's all because of Meaghan anyway. And it's now available. We hope it will kind of push a button in some people's thought process and actually thinking about inclusion in a different way. And hopefully it will make a bit of change, bring about a bit of change.
Fabulous. Really, really interesting. So the book's out now and in the store. So tell us a little bit about the opportunity, it seems to me, is immense here. And it's both one that can be taken up by anything, old line banks or indeed new money money payment institutions. Are there any limits to who should be trying to get involved in this brave new world of finance, Meaghan?
No, absolutely not. I mean, I think when you look at M-Pesa, for example, it was built out of or born out of Safaricom. So I think, and I mean, this is one of the things that for me is most exciting about, where financial services in general is going, is that, it's extending to different providers available within, different channels. So, for an individual, you don't need necessarily to have an insurance product, a loan, or even an account within a mobile banking app. It can be embedded pretty much anywhere. So I think, something that warrants a bit more research and thinking, and something we didn't necessarily kind of touch upon in the book, is how can adjacent players also begin to offer inclusive financial products and services. And I think this is something that we can definitely look forward to and see how this plays out in the coming years.
Fabulous.
Alessandro, please. If I could add what Meaghan said, I think the example of M-Pesa is an example of how non-banks can actually play a role in this. But I think we should not forget that actually regulators and the financial or the countries can actually make a difference. If you look at what happened in Brazil with Pix, the Bank of Brazil created this digital payment proposition that has exploded the inclusion of financial services of individuals into finance, and has driven, for example, the growth of one of their big unicorns in Brazil, which is Nubank. And Nubank is allowing these digital payments to become at the core of their banking proposition. And they are now possibly the biggest, if not one of the biggest, or if not the biggest bank in Brazil, based almost entirely on a digital proposition, based on a proposition that was developed by central banks. So the so-called established old regulators are actually able to create new products that actually change the market. So I would say this is not something just for the fintech cool guys, but it's also some of the established players who should be thinking, can I do something better?
Yeah, that's a great point. And in fact, where I am talking to you today, Warsaw, I mean, that hasn't had as dramatic effect as in Brazil, but their introduction of BLIK as the central bank payment method has been really, really helpful in order to manage to just make banking work that much faster. And in fact, we're almost seeing that now, aren't we, with single payment institutions that have reached such scale that they've become quite vital. I mean, if you look at, I'm thinking of something like payments from Wise alone to the Philippines, which has become very, very significant. And in fact, the overseas sending of money from the rest of the world to the Philippines caused the Philippines Central Bank and the Philippines banking to upgrade their technology quite significantly. So those are all good stories. So tell us a little bit, I mean, what do you think the future holds for this whole ability of regulators to move forward, and what other regulators or central banks are really making progress? Alessandro.
I think what's going to happen is, first of all, for the regulators to actually clarify some of their position on the minimum requirements to open a bank account. Secondly is to enable the large organizations, etc., to be able to actually not enable, but to incentivize large organizations to become more inclusive. So that's from the regulatory side. I think from the big banks, I think they should start realizing that there's a big potential upside from delivering and engaging with this customer base. These customers can be wooed in with very simple products. So you can woo them in with a payment proposition like the Pix and the Nubank proposition is a payment proposition built into Nubank. Once the customer's in there and starts transacting, then you know them better and you can trust them better. You can explore opportunities and services that you can provide them from loans, but also savings accounts, investment products, pensions, etc. So creating diverse set of propositions that they can do. So thinking of the customer as something, there's an element of onboard, an element of flexibility or creativity in onboarding, but at the same time, there's an element of education that can be provided, why not, by the provider of the service. And I think the third point, the last point, is that we said that the three benefits of financial inclusion are social, economic, and financial. If it's the economic benefit is something that impacts the governments indirectly because they want to grow their economies, why can't they be more proactive in some of the financial education that they can do for people who are underbanked? And this should be something that should be priority number one in a lot of countries. Sorry, I went a bit rambling on that, but I'm very passionate about the concept.
No, but it's good. It's good to see this including and inclusive banking. That's a great point of passion. So, I mean, Meaghan, tell us, Alice, I mean, where do you think, is it better for the smaller institutions? Are they going to be more dynamic here in bringing this educational market forward?
Yeah, I mean, I think in theory, and I think just again to build upon Alessandro, and I'm actually in the middle of starting a PhD, and the research I'm looking at is looking exactly kind of what Alessandro was talking about in the context of sub-Saharan Africa. So looking at these national financial inclusion policies, which really vary kind of in shapes and sizes and in orientation, kind of have the commonality in that they're driven from, donors like the World Bank, the Bill and Melinda Gates Foundation. So looking at, what works, what the role of the central bank is in making these, policies work, and some of the other kind of political factors that impact this. But I've always said that, when I look at innovation, coming from fintech and the broader financial services, the regulator plays such a huge role in driving innovation. And I think this is very clear and obvious, from the UK and in Singapore, regulators that were early adopters of the sandbox, and, just being very supportive of opening up competition, but making sure it's done in a way in which it keeps customers safe. So I think it can't be stated enough how important the regulator, the central bank, these types of players will play in allowing, a highly competitive, a stronger playing field, basically, for increasing financial inclusion.
Could I add something to Meaghan's point? So if you look at countries that have zero financially excluded individuals, so they're 100% inclusive, they also all have an ID system, a national ID system. And identification is, in some countries, a right. So when you're born, you get this ID. And some countries, it's something you have to go through a bureaucratic system to generate and identify and to create. There's a correlation. So governments the first step that you can do to eliminate financial inclusion is that of creating a means of your citizens to identify themselves. Secondly, there's bias in the way financial products are delivered. So their financial exclusion is greater in certain segments, in certain sectors, in certain parts of the country. The proposition of products, for example, mortgages, are different for different ethnic groups. And this is not entirely driven by their financial return. This is driven by also an element of bias that is built in some organization. This is not driven by some evil instinct, but is it driven by the fact that some of these organizations truly believe that there's higher return by people in a certain color, or that people of a certain religion are actually more dangerous for provision of a loan and things of that kind. And I think we should be actually looking at reanalyzing ourselves as a society and the way we are implementing some of these products, because there's some built-in bias in there that possibly, or definitely, we should be fighting.
Yeah.
Meaghan, did you want to add something?
No, I completely agree. And I mean, I think, you look at, Sweden, which has, I would say, near 100% inclusion. They have mobile bank ID, which is, every individual has this, and it's kind of, their gateway, not just to financial products and services, but also, digital government and everything. And also Estonia, which has like 98% inclusion. I know in Estonia, you can basically do everything digitally with your ID, except basically get married or divorce. So I think Alessandro is, right on the money with this idea that ID is perhaps the most critical factor in kind of mitigating exclusion.
There's also a bit of, if I may, there's a bit of faffing around about it. So this concept that the unbanked actually want to be unbanked because they want to live on a cash economy. One of the things that the Swedish government did, they promoted digital banking very early on, and they stopped paying pensions in cash. So if you look at Sweden, you will have a hard time finding an ATM machine, firstly, but also an ATM machine that is branded by the bank or is within the premises of the bank, because they are trying to woo people away from physical cash, which, as we know, can be lost, can be damaged, can be stolen more easily, into digital banking. That is, once you learn how it works, it's actually a no-brainer. How many people do you know, maybe even yourselves, that actually, if you leave your wallet at home, you don't go back home. If you leave your phone, you do. Yeah. So the whole concept is digitalization is not the enemy of inclusion. is actually a great champion, and we should really give it a go.
Yeah. And I think just to add to that, I mean, I think India is a fantastic example outside of Europe that has focused on really bringing kind of the idea of identification and digital payments and digital services specifically to cater to the excluded, which tended to be, populations that were more rural in nature. We talk about India quite a bit in the book, which is definitely kind of a leader in this space.
So, I mean, what a fascinating conversation altogether. There is one question I would like to ask each of you. Alessandro has given an answer before, but I'm going to give him another go at answering it in just a second. So, Meaghan, to you first. Meaghan Johnson, where do you think the capital market revolution goes next?
I think you have to look at AI and to get that answer. I mean, I think AI is just really changing every single facet, every sector, every way in which, we live our day-to-day life. So I think, while I can't give a descriptive answer, I would say my answer is to start by looking at what's happening with AI.
Alessandro, a second version. Where do you think the capital market revolution is going to go next?
Well, obviously AI is a clear winner, and I think I can never disagree with Meaghan. I think what's going to happen is we will see an increased importance given to cryptocurrencies, but not the cryptos of CBD, of the stable coins and the speculative ones, but actually governments stepping in into using the idea of a crypto guaranteed currency, so a CBDC, replacing their digital currencies. What this will do, it will change the ecosystem of how payments are generated. It will make everything more efficient, but at the same time, it will change the way the financial providers are structured. So in my view, the country, China is already well on its way in developing the EU1. The European Union is looking at it. A lot of countries around the globe are doing so. The one that is staying behind is the United States, also because regulatory-wise, they are not as supportive of creating a national fiat currency driven crypto fiat currency, which would replace or disadvantage a lot of the organizations that lobby the government for regulation. Let's put it that way, to be subtle. So I think we will see a normalization, I think, of digital payments of cryptocurrency, and it maybe initially in parallel between the traditional fiat, but eventually it is clear and obvious that the future is a form of distributed ledger technology for payments.
Meaghan, I got the impression you wanted to have a last word.
No, I was just going to say, I think in the US, the notion of a digital dollar is completely off the table. I don't know if it's legally banned, but I think, it doesn't look like that's going to be happening in the US, definitely in the next 4 years. So it will
I find the US fascinating when you look at financial services in the US. So they still use these pieces of paper that you have to put a signature on to get payments to be done. And we in Europe, we have moved away from checks. Everything is digital, etc. But we're using American technology to do it. So the most fascinating thing is that we are using what the tech guys have come up with, and we are implementing it at a much lower cost and more efficient than the US is. Now, the European banking system is by no stretch of the imagination a perfect place. But at the same time, we need to realize that maybe we're using this technology better. And maybe boring bureaucrats are a great way of actually getting innovation happen. So well done, EU.
Meaghan, Alessandro, you've made some fascinating points today throughout the course of this show. It's really, really interesting. Ladies and gentlemen, get your copy now of Inclusive Finance. It's a thoroughly fascinating book, a great read altogether, out with Kogan Page Publishers. It's in bookstores or available for purchase online right now. Thank you very much. That's been our show today, number 177, with Alessandro Hatami and Meaghan Johnson. We've been discussing profiting from inclusive finance. We'll be be back next place, same time, and hopefully we might even be live by then because I should be returned from my travels. Thank you so much, guys, for managing to put this together in what was a challenging environment, I know, for both, well, everybody's Wi-Fi this morning, but at least in the end we managed to link up Poland, Portugal, and the United Kingdom with, indeed, surely the most suave Italian in the London fintech scene. This has been another episode of IPO-VID. My name is Patrick L. Young. If you're looking for any marketplaces to be built, let me know. We'll be back next week. Enjoy that copy of Inclusive Finance. Thank you once again, Alessandro and Meaghan. Thank you to our production team today, comprising Janella and Jamil. And I wish you all a great week in life and markets.